How to Make Money in Your Sleep sounds like a scammy title to a video, but we're going to talk about passive income and buying assets. And actually, there is this fabled mythical beast.
Like a unicorn?
Like a unicorn, called passive income. And the idea behind passive income is you have bought an asset, you have created something that gives you a return even when you're not working, let's say when you're asleep. And we spent years trying to figure this out. Like, how do we buy an asset that gives us a return? How do we have to stop trading our time for money so that we can have our time to do things like this, create YouTube videos, hang out in Bogota, travel around the world, have fun. We don't have to work anymore because we figured out how to buy things that give us income and a return without working. And that's the key.
And the way that we think about it, there's a scale. There's passive investments at one end and more active investments on the other. And all we mean by that is the amount of effort, the amount of work that you have to put in order to make money from that investment. So if you have passive over here and active all the way over here, where do these different types of assets that you can invest in fit on that scale?
So let's take one of the most active investments you could possibly make. It's building a business. Building a business for the first few years, you will be putting all of your time into it. It is incredibly active. Now, if you set it up right, if you've been working in it for a long time, if you get a manager that does it for you, it can start to progress to being less active. However, building a business is incredibly active.
Are you speaking from experience, Alan?
Yes, a lot of experience. What about property? Where does property end on this scale?
So the idea with property being an asset is that you buy a property, maybe it's an office building, maybe it's a home that people live in, and you rent it out to the people, and that's how you make the money. And there's different ways of doing that. Sometimes you can employ someone else to manage it for you, to collect the rent, to deal with any problems with the tenants. And that's kind of more towards the passive end because someone else is managed property. They're doing it for you. Or if you manage it yourself, that starts to be a bit more work. And
which is what we did.
Speaking from experience of managing properties when we're the other side of the world, it's not particularly passive. There's work to be done and it comes in fits and starts, but it's still not completely passive because we have to deal with the tenants, make sure they're paying rent,
Fix the toilet.
Fix the toilet. We own 4 toilets on the other side of the world.
It's not that exciting.
It's not fun. So that becomes more to the active side. I mean, there's months that pass that nothing happens, but still there's times when we need to do work.
Which is part of the nice thing. You get paid rent even when you're not doing things, which is this idea of passive income and what you're doing. Then let's move on to, let's say, commodities. Commodities are things like gold, silver,
artwork, fine wines. But actually, by our definition of an asset, which is something that puts money in your pocket, they don't really fit that description.
No, they just kind of sit there and it's basically speculation. You're hoping that you buy it for an amount and it goes up over the years. So let's take gold as an example. Let's say you buy gold today and then you wait over the years and hopefully it's worth more after X number of years. Let's take a real example of this. Gold over the years. Gold has increased since 1990 by 360%.
So it means it's sort of between 3 and 4 times more expensive than it was in 1960.
Yeah, so if you'd have put £10 into gold then and you held a piece of gold in your hand, that £10 would be now worth £36, which is an increase. But how does that compare to, say, one of the more passive ones, which we're going to come on to, stocks and shares?
So if you'd put that money in the Dow Jones index instead, which is one of the stock market indexes, or the way that you look at the value of companies in the States, that would increase by 991%, meaning nearly 10 times more valuable.
So your £10 that you would have invested would now be worth £91. So it's an incredible amount of difference between that and gold, 3 times the profitability over the period. So that's commodities, but commodities are fairly passive. It's speculation.
No, it's speculation. It's not putting money into your pocket. And it's, like you said, just hoping that it goes up.
Then let's move on to another asset class which people like to think about, which is bonds. And what a bond is basically a contract between you and I where I lend you money and you promise to pay it back with interest. That's what a bond is over the period.
You might hear of government bonds. So governments want to borrow money from the general public, and you can buy a government bond, meaning you're lending money to the government and they promise to pay you interest every month, every year, whatever the arrangement is. Companies also have bonds, corporate bonds they're called, where you can lend a business money and they will pay you interest as well.
These are on the absolute passive end of the scale. There is a small risk that with some of the bonds, the company goes bankrupt and they don't pay you back. But they are on the passive end, but they don't return a lot of money. They're very low interest rates and have been for a long time. Which this brings us on to the final one, which is stocks and shares. This is our favourite.
Yay! This is where you buy a part of a company. So you can buy shares in Amazon, you can buy shares in Facebook or Google.
Or Tesla, or pretty much any company that's floated on the exchange.
That means that you can buy shares in it. It's publicly traded, meaning that anyone can buy shares in it. And it means that you have a right to a share of the profit of that company when they make profit. So say you own a share of Amazon, they make money, and then you are entitled to a share of that profit because you own part of the company. And that's what a stock or a share is. And that tends to be on the more passive end. I mean, it depends how you invest in the stock market, and we've got a later video explaining more on that. But it is on the passive end because you've bought that stake in the company, and then you sit and you wait for your profits.
Katie and I's preferred method to do this is with index funds. We buy Vanguard Simple Global Index Funds. You make money in two ways. The price of the companies go up and they pay you dividends as well. So it's definitely an asset because it puts money in your pocket. It is extremely passive.
And the dividend is the share of the profit that I talked about just now. That's what a dividend is, a share of the profit that you are entitled to because you own part of the company.
And what I love most about these ones is Fidelity did a study of its investors. Who were the best investors? And actually the worst investors were the ones who put more effort in. They bought and sold. They danced in and out of the market. They tried their hardest to make money. Those were the worst investors. Some of the best investors were those who forgot they had the account. They just put the money in and forgot about it. And actually, the best investors of all were dead people. Like the people who had died and did nothing got the best return. So it is the absolute most passive investment you could. And actually, the more active you make it, the more you dabble, the more you mess around, the worse your returns. So our preferred method of investing is index funds because it is the most passive and you get incredible returns. That's what we do with it.
Now, a little bit of knowledge is a dangerous thing here. We've got some later videos explaining more what an index fund is and how you can invest in the stock market. For now, check out alandonegan.com/investing. There's lots of articles there that you can read to start to learn about what this means, investing in the stock market and buying index funds.
So many of you who are watching this video aren't subscribed to the channel. There's totally no pressure at all, but it would mean a lot if you subscribe to the channel. It would be awesome. So you've learned about the different asset classes and hopefully you're leaning towards stocks and shares. The two next videos to watch are 3 ways to invest in the stock market and then what is an index fund?